Welcome to Illuminati Silver. We tell you the truth about silver. Today is Monday the 21st of October 2019, and today we're looking at gold and why it is hovering at or around the $1,500 level. So let's investigate. Last week, we saw gold rise by just $1, from $1,489 to $1,490. At the time of writing this podcast video, gold is standing at $1,492, despite the fact that over the weekend and previously, YouTube has been ablaze with so-called experts and stackers who believe that gold is going up to $2,000, then $5,000, and then $10,000 very soon indeed. Well, we're going to stick our necks out here and state that gold is not going above $1,650 this year. And we're not even confident it's going to even reach that level, as it is our extreme prediction for 2019. Now, many people will be asking, or at least wondering, why? Why not higher? We have all the tailwinds necessary to push gold into the stratosphere, they claim. For example, 1. Central banks lowering interest rates and promising to continue to do so. 2. QE, or quantitative easing, and similar monetary easing measures are being introduced, even admittedly now by central banks, perhaps for the longer term. 3. Stock markets are near all-time highs and now looking expensive. 4. Recessions occur every 7 to 10 years, and this one is long overdue. 5. 0% and negative interest rates make bonds unattractive, and therefore gold by definition becomes more attractive, as bonds and equities are competitors to gold for investment funds. 6. Gold is at or near all-time highs in so many countries' currencies of the world, except the US dollar. 7. The US dollar itself is on shaky ground and should fall very soon, if not imminently. 8. Global trade wars are leading to a trading recession, so investors require a safe haven, such as gold, as other options will be further adversely affected by this. 9. There is so much unmanageable debt in the world, investors will soon flock to gold as a fear and safe haven bet. And 10. Record central bank buying of gold. And there are a host of other tailwinds which make gold so attractive. In fact, with so much uncertainty, we haven't even mentioned political uncertainty, such as political instability in a number of EU states, Brexit in the United Kingdom, and of course the potential pending impeachment of US President Trump. It is surprising that gold is not higher than it is today. Now, gold closed on the 31st of December last year at $1,281 and began the new year at $1,287, and today, as mentioned, it is $1,492, an admirable performance, a rise of just over 15.5%, far better than putting your money in the bank or most other asset classes for sure, at least for this year. But when we start to look at gold over, say, a 3-year period, it's up only 18% overall, and over a 5-year period, up only 19%. So most of the gain over the last 5 years has been this year. And yet over this time, newsletter after newsletter, book after book, podcast after podcast from the usual suspects have been telling us that gold should be well over $5,000 an ounce, if not $10,000. And yet it isn't. And it's nowhere near that level either. Well, there are a number of factors that have prevented its rise so far. We shall list them, but not necessarily in order of priority or effect, and we're confident this list is not totally exhaustive. But it's a fair amount of points to be working with. 1. The rising stock markets throughout the world have made it a much more attractive place to invest, at least up until recently. 2. Cryptocurrencies, perhaps not this year, but for 5 years, have no doubt taken away the surplus monies that would once upon a time go into gold and silver. Some crypto advocates may argue it might take away monies that would go into gold and silver in the future, bearing in mind how relatively low cryptocurrency values are and what they quote crypto's, particularly Bitcoin's, potential could be. 3. Until recently, bond investments have also proven lucrative, more lucrative. But that does look as if it's going to end. 4. Gold provides no interest or dividend. 5. Ancillary costs such as insurance and storage or securities issues affecting people buying the physical. 6. Physical demand for gold being relatively lackluster as people's psychology has to a large extent ignored or forgotten about it as a financial asset. 7. Since 2008, wages have risen very little, and often not as much as inflation, and so available or surplus monies have been eaten away via daily living. 8. A tendency towards spending surplus monies as opposed to saving it. Ties into the psychology aspect. 9. Pressure on investment funds and hedge funds and pension funds to produce annual positive returns over and above inflation and their own charges have not so far found gold to be sufficiently lucrative. 10. A degree of manipulation on the COMEX and paper markets have undoubtedly suppressed prices from time to time, but this may now work in the opposite direction moving forward. 11. Gold, already at all-time highs or near to them in other countries outside of the US dollar, has actually made gold too expensive for some, which has reflected in the lower physical demand mentioned earlier. 12. Hedge funds, investment houses, pension funds are potentially waiting for a pullback before allocating additional funds, as they may regard this year's advance of over 15% being an extremely healthy gain, with limited upside short-term potential. And 13. The fear of major government spending and credit loosening, which could potentially reignite equity markets again, at least for the short term. So there are significant amounts of cash currently being left uninvested. It's interesting that a Reuters article out today, quote, Axi-Trader market strategist Stephen Innes, who said, and we quote his words, "The markets are quite long, and people are worried about the trade war. Investors are waiting for pullbacks in gold to step in again. What has been supportive for gold are recessionary fears, and provided that remains in the headlines, it is a significant reason to stay long gold. Right now, there is no major catalyst to drive it in any direction," unquote. Now, the general consensus amongst most traders is that they are waiting to see whether the next move in gold is going to be up or down. In the same Reuters article, technical analyst Wang To is quoted as saying, and we quote him, "Spot gold looks neutral in a range of 1479 to 1502 per ounce, and an escape could suggest a direction," unquote. Our view really is what we quoted in our update on Saturday. Gold is likely to consolidate close to current levels, close to the 1500 level. And it's more likely that next week will reveal more excitement as we await the FOMC interest rate decision and forward guidance on Thursday the 31st of October. So whilst long term we're still bullish gold, short term we may very well see a limited trading range. Having said that, meanwhile silver has had a good start to the day, currently trading at $17.76 an ounce, up some 21 cents, and platinum too is up 0.4%. Now, last week we produced a series of important videos exclusively on silver. They were entitled, Is Silver an Effective Hedge Against Inflation? The Truth About the Gold to Silver Ratio and Is It Important? Silver's Rocket Will Be Financial Not Physical, and Silver's Future Looks Bright But When? Now we've placed links to each of these in the description box below. We also wish to remind you that you now have only a couple of days left to participate in our Recommend a Signature theme tune, where you could win the equivalent of 1 ounce of silver in US dollar terms. And again, we've placed a link to that video and entry in the description box below. Now, thank you for listening, and please do share your thoughts and comments as to what we've previously discussed. And if you have and can identify other reasons why gold is not rising, by all means do suggest them. We do read every comment, even though it may take a little while sometimes to respond to them. And if you haven't already done so, please subscribe to this channel, press the bell sign, and then pop over to illuminatisilver.com and sign up as a free or paying member. And on the point of paying members, bronze and silver members will start to be receiving notifications of additional free courses and PDFs that are being entered into the website this coming week. So please make sure you don't miss them. There are quite a few new additions. Thank you once again for listening. We hope you have found this video interesting and informative. And if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer. Illuminati silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.